Good morning, everyone. How is everybody doing? I just about made that. Let me just share my screen here. So I am looking at a FTSE 100 trade. I'm going to have to go in pretty light if I'm going to go into it. But I'm looking at a FTSE 100 trade to the upside. The price is where I want it to be. Obviously, the question is, does it bounce here? I suspect it will. What I need is some sort of bar to get me in. If this ends up being a really strong hourly bar, then I will take this trade. It's bounced off the level I wanted, so I was waiting for 56.50 for some time now. It's currently at 56.60. So it looks pretty good. The markets are in a lot of trouble though, and if I don't get the bar, then it might well be worth waiting just to come down and actually just give us a genuine higher low. I mean that's quite a way away for right now. So it looks like the price is going to be way beyond where we are, but I'm not so sure whether that's going to be the case. I think that when things calm down a little bit, then we should get a decent reversal pattern down here if it's going to go. But if it's not going to go, hey Sino, if it's not going to go, then this market is in a bit of trouble, because if I show you this, let me show you this on a monthly charts. Now that's our primary trend just there, primary trend line just there, but it wouldn't necessarily end up being there. Let me just do the other one here. Actually, there is a hint because of now these futures markets. The futures market actually looks a little bit different. It looks like it could come down a little way actually on this chart here, but this is the area that I quite like. We've got this horizontal level here, and if we pull the fib from the low to the high, oops. If we pull the fib from the lowest point to the highest point here, we're at the 50% mark. So this is kind of still in decent enough territory to suggest that if we can hold here, then actually, we do get that. Maybe we start to get a lower kind of W bottoming pattern down here. And we could start picking up again. I mean, the V-shaped recovery just hasn't happened for the FTSE whatsoever, and at this stage, it's not looking like it's going to. But the chart looks absolutely hideous, doesn't it? It really is in a lot of trouble. I mean, this is the weekly chart here. Last week's bar didn't look awful. There was a genuine hold, but we have had a huge pickup in COVID-19 cases over here, and I think Europe, generally speaking, is just in trouble. The Nasdaq, which is the one that I would have quite liked to go short on, is it had fairly good numbers from Microsoft yesterday, and I think that the numbers were I think they were a triple-digit beat yet again on Microsoft. So one of the big guns is suggesting that the earnings are still okay with the Nasdaq. I've still got a bit of an issue with the Biden premiership, for the Nasdaq. I think if the Nasdaq is going to come down, then it's probably going to come down because of that. So I'm still looking to potentially short the Nasdaq. I think there's some sort of court hearing later on with Facebook and Google. That might also just suppress the Nasdaq. But there's a monthly pivot down here that, while it's holding up, and it's bouncing off, the Nasdaq doesn't look in anywhere near the same amount of trouble. But the VIX has taken a huge jump to the upside, and we'll have a look at that now. Hey John, how you doing, buddy? John, I'm gonna have to give you my Skype. In fact, in the later show, I'll give you my Skype, and you can send me your journal, so I'm prepared for it for tomorrow. Now, what have I got? What have I got to do? Oh yeah. Okay, so there's the Nasdaq, just under a little bit of pressure. But let's have a look at the VIX. Now it's a real shame that we can't get exactly what we need from the from TradingView when it comes down to the VIX, because it doesn't seem to want to give me anything but daily charts, which is pretty useless. Okay, mate, no problem at all. Yeah, that's fine, John. Yeah, and maybe this is some of the issue, Sino, is that you know the big players have just kind of formed this this wall, haven't they, of opportunity around them, and I wonder whether you know that might cause Biden to go after them. Now this is saying at 31.32, and the VIX is currently at 32. So this actually isn't a very good chart at all. Let's have a look on investing.com and see if I can get a live price of the VIX here instead. And you will see that the danger really that that the stock market is in. Yeah, this is better. This is much better. Let's see if it can give me a slightly cleaner chart here. Okay, I'm not getting my slightly cleaner chart. I don't know why that's not doing that. Let's go back to the other one. Okay, that's a bit slow. Now, I don't know if it's the website or whether it's my internet, but I'm just going to try Yahoo Finance and see if that might help instead. Help things out. Right, that's not too bad. That looks fairly up to date. It's the futures that I've got there, so that's okay. All right, so the 1 day's range. Let's see if it can give me a candlestick. Yep, this is what we need. And let's have a look on the hourly. Now you can see here with the VIX that I'm just going to make sure that the information is correct here. Yeah, it looks like it's about right. You can see the VIX really has taken a genuine pop to the upside. I mean, it took that pop to the upside a few days ago anyway, and it has continued to strengthen as well. So let's just have a look at the 4 hour on the VIX. Yeah, I mean the bars look a little bit weaker here, but yeah, and it probably isn't on a great foundation right now. But the major thing is that the pop to the upside is putting the market under stress, and if we see how that relates now to the S&P, then we can see that the fear factor is definitely in play. You know, over the last few days, you see the VIX is doing something slightly opposite to the S&P, doing something opposite to the S&P, and the S&P looks like it's got some more room to the downside as well. It's through that monthly pivot. Looks like it might genuinely take a move down. Not even at that trend line yet either. So maybe some more room lower in for the S&P. Now let me just check the barometers here. Oh, the Singapore index. That's a bit tricky for me. I will have a look at it, see if I can find it on TradingView, but it's a little bit trickier for me because I don't have it on MT4. If it exists on MT4, Unfortunately, I don't have it. Right, things are in quite a lot of trouble by the looks of things here. Now, the election alone is going to, potentially cause some volatility in the markets, and that might put pace to it. Now, I can tell you right now that every single stock, actually, there's about four that are in positive territory on the FTSE 100, but aside from those four, everything else is lower and struggling. So the FTSE is not in good shape whatsoever, and I want to pick it up down here, but we're going to need to see a genuine turnaround in the mood with global equities. Stayed in that. The Nasdaq looks like it probably will hold up for right now. But let's see if I can find this the Singapore chart. No, it's only going to be chart analysis because I don't really know anything about the Singapore fundamentals. Jeff is he's just having a break today. He'll be in later on. I think Orlando's due to join me at some point. He's not in yet, but he is meant to be in. So what's it called then? Singapore Stock Index is called the Straits Times Index, is it? Okay. Straits Times Index, here we go. Right, well, let's start on the monthly. Whew, not an easy one to read, is it? Well, the first thing I notice is that it is under this this horizontal level here, which is not great. This is pretty bad. Yes, you're right. It is pretty bad. That is not the best. Not the best thing to start with. Under that horizontal level, it looks like that 25.83 is the resistance point. Now let's see what the trend line suggests as well. Yeah, that doesn't look good either. So there's not even a trend line that it's above right now. It's holding. It's under this particular level. Now, if we are looking at this pattern, which looks like a bit of a channel here, then measured move on that. When did it test? There's the break there. Measured move brings it down to 20. Let's call it 21 because it's a round number. And that might well be the level there. But let's just see how that relates to some of the shorter time frames and see if there's anything that could hold it up there. Nothing there. Let's have a look on the monthly and see if we can. Well, I mean, it says continuous contract, but it hasn't really given me too much. There is a little bit of a horizontal level here. You can see that it came down. You're going to have to look at whichever charts you have to see further back than 2001. But coming up here, it did seem to bounce off that level. So it looks like that is a genuine horizontal line. It could be is within this area. I would have thought. Now, what's this lower trend line suggesting as well? Yeah, that kind of puts it in the same kind of zone as well. If you look at that lower trend line here, then this also suggests that we are probably looking somewhere in this area for this to come down to. So looks in a bit of trouble. Certainly broken out of this particular pattern here under this horizontal line. Measured move brings us down to 2100, and the primary trend line, from what I can see, I don't know how far back the data that you can get will go, but it looks like there's a primary trend line here, and the primary trend line is also sitting somewhere between 21 and 1900, and it's just going to depend on if or when it comes down there, whether that 21 is going to hold up. And if it takes a couple of months, then the 21 looks like the buying opportunity on the Singapore straight time. So that would be my my overall thesis on that. How does it compare to the DAX? Okay, what the Singapore or the S&P? The DAX. I mean, they're all in trouble right now. They're all in a lot of trouble. The Nasdaq is probably the one that's doing the best, but you know, the DAX is plummeting. We've got just heightened cases now in the globe. You know, in Europe and the UK, we just got more and more cases, and it seems like it's going to be more deadly from what I gather as well. You know, it's the news on this stuff does seem to change quite regularly, but it does appear that we are in Europe potentially heading for another lockdown. So things aren't too pretty. There's no doubt about that. And the DAX is really no exception to that. Now, if we're looking at the DAX for potential buying opportunities, we're probably getting fairly close. You know, on a technical basis, we're probably getting pretty close to where it start being interesting to look for buying opportunities with the DAX. But it might be that this global pandemic is just going to sweep, you know, everything in its path. It might well just sweep everything in its path aside, and we might see global equities back to or near the lows again in not too long, which is a good thing in a lot of ways, because if you can keep your powder dry and make sure that you are not overexposed in this market, then you're just going to look to pick it up again. Now, there is a bit of an issue with whether things are, you know, are ultimately going to break, because there does seem to be a lack, firstly, of stimulus. There's a lack of stimulus, but secondly, possibly a lack of tools for the Fed or anybody else to dig the United States and the United States companies out of the hole that they have got them in. So because there's just no interest, you know, there's no interest rate to loosen. But they will do something. You know, we could be headed for that negative interest rate environment. Now, that does make things like gold and silver a bit more of an interesting prospect. So if you want to be looking at long opportunities now, even though that they, you know, it's looking a little bit high, the long opportunities look like they appear to be in precious metals right now, and they don't appear to that the opportunity doesn't appear to be with the likes of the DAX or the Nasdaq. But as I say, if you can keep your powder dry, there will be another opportunity to go long on this stuff, because you know it just got way ahead of itself. And the V-shaped recovery may well not be the V-shaped recovery that people are you know, were originally talking about. Maybe we're talking about a U or a W shaped recovery instead. So a couple of lines there on the DAX where it starts to become interesting. Certainly where we are now is the first point of call. This trend line along here as well looks like a primary trend line, would bring us into around about this horizontal level as well, depending on when it came down there. And then the lower line would be the final port of call before you start thinking this might actually be a lot more significant than just buying it up as things get cheaper. You know, maybe things are genuinely breaking. But as I say, at this stage, we don't really know. But we know that the globe is in a bit of trouble. Yeah, the S&P is the same as the Nasdaq, except for the Nasdaq. If we think about what happened last time with the pandemic, the S if you consider the top stocks in the S&P, they're made up of similar ones to the Nasdaq. So if you run down the S&P's stock list, and I'll give you an example. So the S&P will have, I mean, it's got 500 stocks in it, so it's a little bit more aggregated. But you know, the likes of Google and Microsoft and Apple are in the S&P, and they are also, you know, part of the Nasdaq. But the Nasdaq actually did pretty well, didn't it? When, you know, because people were encouraged more to stay at home and do things digitally, if you like, you know, more remotely, then the S&P actually did pretty well out of sorry, not the S&P, the Nasdaq did pretty well out of the pandemic. Well, it did really well out of the pandemic. I don't think the Nasdaq's issues are really to do with coronavirus at this stage. I think the Nasdaq issues are a little bit further reaching than that. I think the Nasdaq issues are to do with Biden. I think the Nasdaq issues are to do with the monopoly that that some of the companies have now got, you know, within their markets. So you know, I would be looking for the Nasdaq to fall. It's not, as I say, it's not really a pandemic play. It's a completely different thing. So it looks a bit different to me than the S&P in many respects. The S&P should hold up in comparison to the Nasdaq because it's a bit more aggregated. So I guess the S&P could suffer from two two forms of attack here, because we've got the pandemic as a potential form of attack, and we've also got the companies within the S&P and the Nasdaq that are going to be under investigation potentially. So that's where the S&P could suffer. But I would have thought when the pandemic clears up, the S&P would be a much better place to put your money than the Nasdaq. But they're all in a bit of trouble. They are all in a bit of trouble and not looking like they are likely to recover at this particular stage. Fascinating, some of the stocks that are actually in positive territory right now. I've got a holding in Aston Martin, as you guys probably know, and Aston Martin are actually pushing to the upside this morning. Strangely, they've taken a big bounce up. Whereas EasyJet, who I also hold, are you know, inevitably, I suppose, coming further to the downside because they are going to be more exposed to this pandemic than anything else. And picking, you know, what's exposed and what isn't exposed is a bit of a trick of the game. You know, you can always try and, you know, buy some protection. I know some of the banks might start doing fairly well. HSBC came out with some pretty good reporting recently. So you might be able to kind of protect your accounts by picking the correct ones. But if you're looking at indices alone, then the likelihood that they all come down is all based on what happens in the States. Hey, LT. And if we see the Nasdaq, if we see the S&P moving to the downside in the, you know, with the velocity that it currently is, and then we look at the Nasdaq moving to the downside, breaking that monthly pivot, and that's really is a genuinely important area for it to hold. And it's not just the monthly pivots. If you look at some of the levels on the Nasdaq, then you can see that there is a 50% retracement of the previous move to the upside. Similarly in this area. So if this starts to break down, then we're hopping down to the next one and potentially hopping down to the next one and potentially, you know, a long way from this particular point. Yeah, I guess it is like the Batman mask, isn't it? Yeah. I'm not so up on the Batman mask. I don't really understand it, but yeah, I guess it is. It does look like a Batman mask. But S&P, you know, whether we call it the Batman mask or whether we say that it is for, you know, traditional patterns, we call it what in this traditional pattern, then what we have is an M topping pattern. That's what we're looking at. Sorry, the Nasdaq. We're looking at an M topping pattern with the Nasdaq with the Nasdaq. Yeah. Well, the CAD. Let's have a look at the Euro CAD, because that was one of Jeff's, wasn't it? The Euro CAD. So Euro CAD. No, I think the CAD could also suffer under Biden because of the. Oh, what a shame, because that means that we've missed the. I don't know the pound trade well. I know we do it every day with Jeff, but I just don't know it. I'm always kind of like, doing something else when he's talking about it. But you'll have to tell me, guys. You know it better than me. Would have this made money today, the pound trade? I know you're looking back 3 bars of on some time frame, aren't you? Would the pound trade made money today? Have a look at it. Let me know. Jeff will be gutted that he didn't trade that if that was the case. It would have made money. Yeah, and it probably would have made quite a lot. Well, let's have a look at the. It's already 1-to-1. Wow. Oh, you in it, LT? Oh no, is anybody in that? Or do people only trace it? Watch Jeff do it. You haven't entered. Okay. The euro pound is the one of interest. As always, because of Brexit, there is. I mean, there's no news on Brexit today that I've seen, but you can see that the range we're in, every time we pop down to this lower line, it's a buy signal or a buying area. Every time we pop up to the upper line, it's a sell area. Might even be a little bit tighter that line by the looks of things. It might be along that area instead. Seem to reject there, came right back down again. And it's popping up, but you can see that this is going to explode at some point. So trying to pick it in the right direction is literally you do just want to take the trade from the upper or lower line, depending on your bias in some respects, and not worry about getting a setup, because by the time you got a setup, it's in the middle of the range, and this range is becoming tighter and tighter and tighter, and it can't go beyond what looks like the 10th of November. So by the second week in November, we are going to know we should know, I should say. It's not definite this line is being respected. It could be that one, which would put us around about the 17th, which is still around about the second week in November. But around about the second week in November, we will know certainly what the pattern is telling us. We won't necessarily know what the outcome of the Brexit situation and scenario is, but we will know what the pattern is telling us, and it's certainly looking at this stage that the pattern is buy from the low and sell from the high, and see which way it breaks through. Wouldn't be a bad idea in some respects to have both trades on and just put one at a stop loss and see which one it ends up, see which one ends up playing out. But you've got to get the line. There's no way that you could get anything but the line with this one. That's why I was waiting for this one to get the line, but I couldn't trade this because at the time my line was here. Maybe it is a bit lower, but I'd prefer to trust that upper line. If we do trust that upper line and it comes to this area here, it looks like this horizontal level along here, which if we look on the 4 hourly, then we can see that there is just a little bit of a tip here and here. Looks like that may well be act as further resistance for that particular point there. So I think the area to try and get that short would be 0.9110, I guess. Is probably the best case scenario there. So markets are in a lot of trouble, and I'm just checking my equities. They're in a bit of trouble as well, but nothing too ugly just yet. But look at it go. It is in grave danger right now, of getting right back to that low down there. And that's another 600 pips to the downside. So the FTSE's in a lot of trouble. The S&P, a lot of trouble. Actually, I want to come to gold and silver in a moment. So in fact, we'll look at those next. The Aussie is in a lot of trouble. The Hang Seng is in a bit of trouble. The IBEX is in a lot of trouble. Euro Stoxx 50 in a lot of trouble. I mean, the European markets are in a lot of trouble right now. Looking at the way these going, but you look at this. You know, when you look into Asia, nowhere near as bad, is it? Nowhere near as bad. Hong Kong. So this is the Hang Seng, and the Hang Seng is just a little bit lower, but it's just drifted a little bit lower rather than being anything too dangerous. You know, on the daily, it looks completely different. But you look at these on the daily for some of those other ones. You know, the likes of France. Look at it. It's gap down here. It's in a lot of danger, as I say, of a complete collapse. And who knows, that could happen. So if you're on board, then you really want to stick with it. The levels are going to start closing in though. And if you look at this on the FTSE 100, my level was 56.50, which is here. Now it's through that level currently by quite a bit actually, but it's almost 1% lower. Yeah, it's 1% lower than that particular level there. But there's another level down here that could hold. In actual fact, yeah, that's probably the next one. That doesn't look too bad as the next one. So about 5,500. There's another level on the FTSE 100 which could start to pick it up. So you have to be careful shorting it. It certainly looks like the easiest trade in the world right now. It could go back to the March low. Yeah. Well, this is the thing, LT, and this is why I say keep your powder dry. Yes, Alan, I agree with you. And this is why I wonder whether there is there is something else out there which is affecting the likes of Microsoft, Google, Facebook, Amazon, and Apple, in as much that they have got a Biden administration to navigate through. So I wonder whether that could be the story here, rather than the earnings from Microsoft, because you're absolutely right. You know, when we think about how things turned out with the pandemic, they turned out pretty well for for some of these tech stocks, because they were able to provide people with cloud-based solutions for staying at home, and we see that reflected, as you rightly point out, in the price of in the earnings from Microsoft. But what that does say is that if Microsoft comes down to an attractive enough level, being drawn down to all this stuff, then it starts to become a potential a possibility to look to buy it. Now, Microsoft did say in their earnings report that that one of the issues was with small business, just not able to do quite as much solutions with some of these small businesses, but that won't affect it on a broader scale. Now, let me just have a look at Microsoft, and let's see what we've got. Microsoft, here we go. Hold on, why is that? Oh, I see. Okay, let's have a look. Because this is, if we're talking about, the likes of Microsoft, then you want to look at their balance sheets and see what's happening with it. And if you have a look at the cash here, seeing what profits that they've got, then you can see that Microsoft is just growing and growing and growing. It's having there's no halt in the numbers with Microsoft at all. And net cash from operations, the same thing. They're just growing and growing and growing. I mean, it's just that the numbers are absolutely incredible. That they're starting to get something back from their investments as well. So just looking at these very, small numbers here, free cash flow as well. They've got some money in the bank. If things were to go wrong, then they've got some money in the bank. So it's a great company, no two ways about it. So that means that we can start looking at the likes of Microsoft and seeing whether, if the Nasdaq was to start to coming down, okay, Biden may well get in its way, but for right now, what we know about this is that if this comes down, and let's say Biden doesn't win, then surely the first thing we should look at is the likes of Microsoft after posting those numbers. Where are you? Stock. Now this is a monthly. After posting these numbers, and it looks very similar to the Nasdaq, doesn't it? Let's see where Microsoft does become an attractive prospect. Definitely a head and shoulders pattern up here, and this is where we need to look at where fundamentals and where technicals have to meet. The VIX, by the way, is taking a huge hop to the upside right now. So there is a lot of fear. There is a lot of fear. 1 second. I just need to check one other account here, so I don't want to bring this on the same screen. Right, there's that. Yeah, that's all right. Okay. So, bring you guys here. Yeah, the election fear. 200. Okay, let's have a look. Let's have a look at 200. Oh yeah, Angel's just reminding me there. If you like the show, guys, just a quick reminder, just to like the show, and if you're not subscribed, just subscribe to the YouTube channel as well. Right, let's have a look. So you'd be looking at 200, which I think is about right. It is about right, isn't it? It might be a little bit lower. Now, the way that we want to look at this is what is it suggesting on the monthly to start with? We want to analyze it in the same way. I mean, the move again has been fairly parabolic to the upside on Microsoft. There's the primary trend line there, looking at the closing prices. 171 looks sweet. It looks like a really good area. Now we do need to make sure that we get to gold and silver fairly soon. Let me just double check what's going on there. No problem. Okay, so that looks like the sweet spot at 170. That does mean that this trend line will probably be broken because we are looking at monthly charts here. So maybe 170 is a bit ambitious. It's possible that this trend line does come down a little bit lower as well. So that would give us some time to get to that 170. So on the weekly, the previous support level is at 187. Now I'd probably want to see that, to start scaling in, and I think your approach would be correct if you kept enough in the bank just to allow yourself a couple of chances at this, just in case it was to continue to fall. Then I think that would probably be wise counsel to try and get in at 87, and then if it drops again, trying to get in around about the 170 level. And maybe even one more, just a little bit lower, would be the wise thing to do. This is a head and shoulders pattern up here, and it is on the weekly chart. So Microsoft is looking under pressure if we think of this technically speaking. But we know that the numbers stack up. We know it's a good company. We know that the earnings are decent. We know that we will probably get a dividend payment if we were to buy into Microsoft. So having it on our watch list is the right thing to do, and keeping our powder dry, i.e. don't waste your money on chasing a market or getting into something that you don't like, or getting into this too early, it would be a really good way to play it. So keeping some money in the back pocket and waiting for the likes of Microsoft to come down to your price means that you're going to be able to get into it. Nvidia, another great company. You know, there's no way that they are going under, and they are providing so many new forms of technology that, you know, even if things did get broken up and shaken up a little bit, the likes of Nvidia are they've got enough going on with them as a company. And if you don't know Nvidia, look into them, because they are you know, they're one of the companies that just lie in the center of the universe for some of this tech stuff. So again, well overblown up here. There's no way you'd want to buy it down here. It looks like, you know, the last point of potential support would have been down here at 28. Sorry, 281. And is it likely to come down there? Probably not. I think we probably find a support line somewhere else. But it's another one that would definitely need to be on the watch list. So watch out for Nvidia as well if the Nasdaq does get become a little bit heavy here. Now let's have a look at gold, silver, and the cryptos as well, because I still want the cryptos, and I want Ethereum at 365 if I can get it. But when it comes down to the precious metals, big question of, do we get the opportunity to get into these at a better price? Technically speaking, this is looking under pressure, and looks like the dollar may well strengthen into the US election as well. So this is, you know, silver is under the level here on the daily. Technically speaking, this looks weak. I'm not sure if I'd want to trade it lower. I think that the fear factor may well play into the likes of silver and gold's hands in many respects. So it might not be the wisest thing to do to try and trade in the opposite direction against gold and silver. But I'd really like to get gold and silver as well as part of my portfolio if I can get in at a correct point. And that point certainly looks like this horizontal level here would be the first one, so 23.50. And then we're coming down to the next level down. Now let's have a look at a fib on this as well and see what we can surmise from there. The pound dollar is going down, 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 suggesting that the dollar is strengthening significantly. So that's good for silver. Let's have a look at the dollar then on the daily. Yep, dollar's up on the daily. Looks like it's finally broken through that. Oh no, not quite. Not quite. Dollar's higher there. Aussie dollar. It's not in too bad shape, the Aussie dollar. Euro dollar, much weaker. Again, not breaking through the level, so it looks like a buy zone. Not sure I'd want to buy it right now. Yeah, I know, Dennis. I know. That's where. But this is the thing, isn't it? If we can't get the price that we want, then there's no way that we have to stick with that. But you're absolutely right. I did want it at 280. I know I'm flip-flopping around here, but it just hasn't come back. You know, I looked at this gap down here, and that you know, that gap sits around about the 283 level, and you know, that gap was exactly where I would have liked to get in. But Ethereum just hasn't come back at all. It just, you know, it popped to the upside and pops to the upside. Does it come back here? Maybe it does. You know, maybe at some point it does pop back down there. And if I can pick it up and it stops me out, then I'll pick it up again down at the 280. But all I've got on offer right now is 365. Sorry, that's the best that's on offer, because it's got this isn't an uptrend, and it's got too much to get through to get back down to my 280. So I'm going to try and pick it up in this area, and then see if I've managed to get the lower end of the trend and see if we go higher. But yeah, you're absolutely right. It has eluded me. It's been a bit of a slippery one for me to get into, but I still want Ethereum in the portfolio, and I want gold and silver. But again, you guys telling me about the pound, LT telling me about the pound suggests dollar strength. It's not really suggesting pound weakness per se. It's suggesting dollar strength, and that looks to be exactly what we have. So I'm just going to check something here. Yeah, that dollar strength is probably going to put more pressure on the S&P and everything else. Let's just double. I just want to double check the S&P. Yeah, that's got a while. Yeah, it could be a bounce coming up here, and the Nasdaq. Yeah, the Nasdaq looks like it's actually got a bit further, so that's okay. All right, can take our eyes off that. Yes, the dollar strengthening, and you were just telling me about the pound weakening, which means that Jeff would have been in really good shape. But you can see, you know, if we look at the pound across the board, it's a little bit weaker against the Aussie. Not too much, you know, from yesterday's close. Not too much against the CAD, against the Swissy. Gap to the downside, but as the days open up, it's kind of frozen. Much weaker against the yen, and it does look like the yen is potentially the place that people are putting their money during the fear kicking in. Kiwi yen popping to the downside. Let's have a look at dollar yen. Yeah, dollar yen not so bad. So either the yen or the dollar looks like the play right now. Not gold and silver, which is good because, as I say, I want gold and I want silver, or I want silver. I want one or the other. But this is the point. Just to wait. If you're not in any trades, then just wait because the market is on the move already. So what we're trying to do is make a choice and make a decision early-ish to try and get us into something. Now, let me just do that. And one more thing here. There we go. Right. So all I've really got is a list of things I'm looking at. I haven't got a what's the difference between cryptos versus metals? That's a really good question, LT, and this is why I think that's really difficult to answer. I think I think if cryptos are the kind of future way that people will be protecting themselves, then we need to get into it. Hold on one second. Then we need to get into it. But that doesn't mean I don't think that we should jeopardize the potential also to get into gold and silver as well. So I think we need gold and silver, and we need cryptos as part of the portfolio. Hold on one second. All right, that's all right. Okay. Okay, no problem. No problem. Oh, that's okay. Right. So yeah. So I think we need them both. So what I'm looking to do is get into both gold, silver, and cryptos. And what I suspect will happen is that they'll both act as some kind of protection, depending on what happens with the market. But I think with gold and silver, if let's say the market starts to get really negative, I think gold and silver might well go up, whereas the cryptos might start coming down a bit. But if we get some expansion, I think there's a chance that the cryptos going up would hedge away any of the risk that gold and silver come down as maybe some of those some of the confidence comes back in. Well, I can't say what you need to do, LT. It's not. I'm not qualified to tell people what to do with their portfolio. But what I'm suggesting is, you know, what I will be doing is if we consider, and this is just on a simple kind of risk on, risk off kind of thing, if we consider what we need to kind of have in, then with balance in a portfolio, you need to defend, and you need something defensive, and if you like, something offensive. So I would put cryptos in the offensive band, but they can act as a bit of defense as well. And the likes of precious metals kind of they would be more kind of over here in the defensive band. Now, if everything, if all assets start to fall to the downside, I would have thought precious metals would start moving up. Cryptos may well move down as well, but that means that you should get near balance between the two positions. Now, if things get confidence, if things start going really, really well, then we'd want to buy cryptos. And also buy precious metals, because what can tend to happen is that while things are going well, people will start kind of buying this stuff just to protect any downside movement with anything that is an offensive play. So that's why I like them both. There's a chance they both go up. There's a really good chance they both go up. Now, the only way they're both going to go down is if the dollar strengthens significantly. And I just can't see how that's going to happen. Now, the other thing about gold and silver is that they are a hedge against inflation. So because they're a hedge against inflation, then it seems to make sense to me that that we are going to get in the United States a spike in prices, because there's more and more dollars being printed, and if the pandemic continues to weaken the economy, there's more and more dollars that will be printed, meaning that food and and things generally are going to become more expensive, and it's the likes of the precious metals which protect you against that. So they'll almost act in a as a protection in a different scenario, depending on what the scenario is. So that's the reason. Yeah, exactly. And Singapore now electing cryptos. I mean, Shukri is much more qualified to talk to you about what's happening with the crypto space. My thing is a much broader view. I just think that crypto is here and it's coming, and it's going to be sort of a main player over the next 20 to 200 years. So we should really have something in a portfolio. Otherwise, we're probably not protecting ourselves and taking advantage of what we know. We can't take advantage of everything, but we know that cryptos are here. We know that cryptos are strong, and they're going to be around. So surely we should be protecting ourselves. Okay, I have got. Yeah, cool, LT. Yeah, I mean it's that's the way I'm thinking. And as I say, I'm not qualified to tell you. It would be irresponsible of me to say do this with your money, because I haven't been to whatever that accounting school or whatever qualification you need. So it'd be illegal as well. So I can't tell you what to do with your portfolio, but I can certainly say my approach is to have a bit of cryptos. Have some cryptos, have some precious metal, have something expansive as well. If you wanted to kind of like protect yourself a little bit further, maybe you could kind of bring in some yen or some Swissy. But we always hear about this stuff, don't we? Balance the portfolio. That's what the big guns do. That's what the big account managers do. They balance a portfolio. That's my approach when I trade. That's what I want to do when I trade as well. I want something balanced. So if I've got an Aussie yen long, really the next trade I kind of want to look for would be a Swissy. I don't know, a Kiwi Swiss short. That would make sense to me if I've kind of got something running. Yeah, no, I get it, LT. I get it, and the thing is, you know, it does make it tricky when you're kind of starting out. But we can have the same mindset even with a small account as the big guys have got, because all they're doing is protecting their position. You know, they're not. It doesn't really matter whether they've got $1 million or whether we've got $1,000. We can still protect our overall outlook by being sensible and sort of like, you know, trying to look for yin and yang. We look for one, then we look for the other. We're long Aussie, so let's see if we can find a short in the Swissy. If it's not there, it's not there. But you know, that's an approach, and that's certainly the approach I will take with cryptos and precious metals. Right. Anyway, I don't seem to be appear to be joined by Orlando, and he's not probably coming. So so I'm going to wrap it up here, guys. I think I'll be in with Jeff later on in the US show. So I'll see you back in a few hours. I think it is going to be 12:30 my time, which is 3.5 hours from now. So 3.5 hours from now, I think makes it 8:30 your time. Correct me if I'm wrong. But I think I'll see you back in the on YouTube at 8:30 your time, and then we will have the US session. And John, in that session, I will send you my Skype, and when you're ready, you can send me your journal, and I will just have a look through it. Okay, fantastic. Thanks so much, guys. Thanks for joining me. Thanks for being involved and all the involved in all the participation. It does help actually when I'm on my own. But just be safe in the market. The market is well and truly on the move. Yeah, catch you soon, John. Thanks, buddy. All right, have a good one.